And my first guest joins me in studio, Mr. Matt Chipman. He is the editor-in-chief of the Green Baron Report. Matt, always good to see you.
Glad to be here again, Don.
Well, as I said at the top of the program, depending where people are watching this program in the world, either the elections are coming up or they've just passed. But it seems, especially here in the United States, the attitude is that there's another wave of change that's upon us. And there seems to be a lot of enthusiasm in the marketplace anticipating this change before it's already happened.
Yeah, well, the market is digesting a pretty good move. I think it's been validated that we're probably going to have a lot of change. I think people are excited about maybe some more balance to our political environment, and we'll see where that takes us. You know, I know a lot of people are upset, you know, because things aren't changing fast enough. Whichever side of the table you're on, I mean, we need to see how some of this stuff is gonna balance out. There's a lot of fear out there still, which keeps the market from really going crazy because of that fear. But you know, we have had a good move in the S&P. We're about 1040 to 1195 area.
Right.
So the market is digesting that, and you know, it's a market of stocks and not a stock market. So we're always looking for opportunities. You
know, you're absolutely right. And you know, when we saw the market come back about a month ago or so, it kind of pared back a little bit. It really seemed like the floor was that 10,000 level. And whether that means anything or not, let's face it, most people today look at a successful market and they gauge a successful market with a 10,000 Dow.
Yeah, we did hit that again, and it held solid support. And of course, there's a lot of bears out there who thought we were going to collapse again. But you know, the buyers seem to surface down there. So we're destined for this little trading range. It seems like we're in right now. I'm not crazy about the dollar falling as much as it has. I think it's actually maybe due for a little bounce soon. But you know, gold continues to be strong, which is an area we have some focus in.
Well, what's amazing about the gold markets is that you know, 6 or 7 years ago, analysts were predicting that gold prices are going to double. We all said, "Oh, sure, they will," and they did. And even today, we're hearing many analysts are still on that bullish remark of gold prices are going to double in the next few years. And again, we're still all saying, yeah, sure, they will, but they might.
They just might. I mean, I've read some analysis from people that have been right all along, and they're virtually assuring people it's going to 2,000. You know, and you know, it's not going to happen overnight. It seems like they're going to remain strong. Whenever I see this type of strength in one commodity, I always think there is a balance, because the supply will come onto the market as soon as refining capacities can increase, and you have that. But there are a lot of other factors pushing gold higher.
Well, you know, in the last, I'll say 4 or 5 months on this program, and I know you're watching them too, we have spoken with the CEOs of a number of companies that are involved in the gold markets. I think right now we probably have 4 or 5 companies that we're following right now that are involved in gold. And for people who are looking at the gold industry and looking at gold prices, and again, analysts are still telling us, as we mentioned, that prices are going to conceivably double. How does that translate over to people who are looking at junior gold companies?
Well, what I'm looking at are some of the junior gold companies can get into production fairly quickly by going into existing ore stockpiles. Those are basically the stuff that was pushed aside or left that was perhaps low grade, or they didn't go after the real high grade stuff. Obviously, when gold prices were at $300, $400, $500 an ounce, you know, it didn't make sense to go after low grade. So now what has happened is, even though it costs more to process a lower grade ore, could cost $400, $500, $600 an ounce to process that, $1,300 gold, you're doubling your money. You know, so now it makes sense, and it's extremely profitable to process all that low grade ore.
You know, we're seeing that not only in the gold business. I know there's an oil company that we're following that is basically in the business of reopening wells that were shut down when oil was at $14 a barrel. Now that it's been hovering right around $75, $80, it becomes profitable again to get the stuff out of the ground.
Absolutely. I mean, oil is up today. I mean, I think we're up really around 82, 83 now.
Right.
And with the dollar dropping again, you know, it's actually pushing oil up. It's pushing gold up. So those are interesting.
Now, your company and ours are both following a company called Griffin Gold. You had some news about that. Why don't you tell us about that?
Yeah, well, Griffin trades on both the Toronto and the U.S. Bulletin Board, and we think they're one of those companies that has a tremendous amount of stockpiled ore. They have a mine called the Borealis mine. They pulled 600,000 ounces of gold out of there over the last 30 years. Well, they own the 27.5-mile radius track, and in central Borealis, they have proven reserves. They call them proven and probable reserves of 370,000 ounces of gold. You know, imagine what is 50,000 ounces a year once you process that. What does that translate to? About $60 million a year in revenues. These guys have all the major permits already. They already got them, so they don't have to wait the 4 or 5 years like most companies. They can rock and roll, and we hear it's coming soon.
It's interesting. We talk about gold and oil in the same sentence, but they're very similar. That you know, the sayings about both are the best place to look for oil and gold is where oil and gold have already been found, and that's you know, that's what their business model is. For folks who want to know more about the Green Baron report, Matt, how can they get more information?
Just go to thegreenbaron.com, click on any Join Now icon, and we'll add you to our database. At any time, you can also pull yourself out if you don't want to receive our newsletters. But I got to tell you, it's free. We don't share your email address, and we supply you with some great information and some great stock ideas. And you know, once again, I think that GYPH, you know, Griffin is an interesting play right now.
Once again, the Green Baron report is the name of the newsletter. The Green Baron is our website. Matt, always a pleasure.
Thanks for having me, Don.
Take care.